Here's the thing. Sometimes the most dangerous market risks are the ones hiding in plain sight. Well, my guest today, Nick Hubble, my good friend, has spotted a huge risk that most investors are completely overlooking. And it has everything to do with how history might be about to rhyme in a very uncomfortable way. Now, the market seems very relaxed about Trump's recent trade threats, especially after Colombia and Mexico and Canada quickly came to terms. But Nick's piece today, a fascinating historical parallel between today's fentanyl disputes and the 19th century opium wars, that suggests China might react very, very differently if the US follows that same path with them. So, Nick, welcome, buddy.
Yeah, good to be back.
Good stuff. Now, you've drawn a pretty interesting and remarkable connection between current trade tensions and China's century of humiliation. Could you, for those that, I mean, we've covered this before, but maybe for those that may not have seen that initial video, can you walk us through why this historical context makes the current situation so much more volatile for markets than investors realize?
Yeah, the underlying claim here is that the Chinese have a very long memory and they know how to bear a grudge over very long periods of time. And so if Trump, as he has done, starts a trade war with China using fentanyl as his justification, that's it to the Chinese, from their point of view, that is like the most hypocritical thing that's ever happened in history. It is going to be treated as an insult to the Chinese. And I don't think Trump realizes this. So he thinks he can say to China, you're selling all this fentanyl into the US, smuggling it in, and that makes what you're doing immoral. So we're gonna tariff you. And he thinks this gives him the moral high ground. Therefore, China's going to back down. And there's no doubt that this has worked with the Mexicans and the Canadians so far. The Colombian side was a slightly different story. But straight away, when Trump said, look, we can't allow you to bring this much fentanyl, enough to kill huge portions of the American population. You've got to do something about it. Otherwise, we're going to tariff you. So they did do something about it. So the tariffs were delayed. So it worked, right? But the same strategy with China is just spitting in their eye. It's the Chinese are not going to go along with that. And the reason is their history. So it's a century of humiliation, which started just under about 180 years ago, actually. So about 200 years ago, the British Empire was buying absurd amounts of tea and silks and other goods from China. And China was refusing to allow British goods into China. The result was a very large trade deficit. That trade deficit was paid for in silver because that's the only thing that the Chinese would accept. So basically, the British Empire was drained of silver. It was drained of its money supply, and the lack of money was having pretty big consequences. So the British came up with a solution, which was to sell opium from India, British India, into China to get Chinese people addicted. And this would rebalance the trade, and it worked exceptionally well. The amount of opium sales into China pretty much balanced out the tea and silk trade eventually after over many decades. The problem is it completely destabilized China. It caused all sorts of economic, political, social disasters. And so there's this cycle that repeated several times in the 19th century where the Chinese would say, no more opium in. The Royal Navy would show up, blast the hell out of the Chinese until they surrendered and gave in to the opium sales again. That happened repeatedly over and over again, sometimes just threats, sometimes open warfare, but each time the Navy and to a lesser extent the Army would completely dominate the Chinese, despite the fact that it was on the other side of the world. That's how the British end up with Hong Kong. So now we've got a very similar story happening where the Chinese are effectively selling loads of opioids into the US, which is the current Western hegemonic empire, and the Americans are picking a fight with them over it. So as far as the Chinese are concerned, this is the height of hypocrisy, right? So my worry is that investors are now pricing in that the Chinese will roll over just like the Canadians and the Mexicans did. So markets are recovering from the drop that occurred on Monday once the tariffs were priced into the market. Because, it's the shortest trade war ever is the meme online because Trump's just winning. He just gets the Canadians and the Mexicans and the Colombians to do whatever he wants by threatening them with tariffs. And my worry is that once he tries the same tactic on the Chinese are going to react extremely badly. Actually, they already have in the last 24 hours, but I think this is going to continue to escalate a lot worse. Trump is expecting to roll over. Markets are expecting to roll over. What if they don't? And I think Australia
Yeah.
is the most exposed to this trade war getting out of hand.
I want to come to my next question is about how Australia might be affected by it. But first, so you said, back in the day, 180 years ago, the British just rocked up to China and started bombing them, like literally bombing them, right? The shore side. I mean, what's the likelihood? How might China actually react? I mean, they're not going to rock up to the Gulf of America and start flinging bombs. I can't imagine that's going to happen. So how might they react then?
Yeah, so the whole point of trade wars is that there's a repeated escalation on both sides.
Yeah.
The tariffs go higher and higher. They ban each other's companies. They could do what they did to the Russians, where they start freezing assets in each other's countries. All sorts of sanctions. The point is that this is the risk of a trade war: is that you get this tit for tat that leads to eventually a war if no one de-escalates at some point along the way. I don't know if it's reasonable to predict things to get that bad or not. I'm not really taking a position on that. But the point is here that the Americans and the financial markets think the Americans are dominant. But they're going about this in a way that is deeply offensive to the Chinese, or deeply hypocritical, or deeply whatever you want to call it. And therefore, the reaction from the Chinese is going to be far worse than anyone anticipates. So at least in the short term, possibly for the longer term, there's going to be way more disruption coming out of Chinese tariffs on American goods, and then this tit for tat beginning, then is being priced in by the market.
So let's bring in Australia now. Like, how differently might Australia be affected by US-China trade war compared to previous tensions then? And I guess the next obvious question is, what specific sectors? I mean, I'm assuming resources will be one hit, but are there any others as well?
Yeah, property, all that Chinese property demand. And by the way, a lot of the Chinese property demand in Australia, according to some researchers, is fueled by the fentanyl drug trade, because they need some way to launder their money, and Australian property is a famous money laundering device. You mentioned that this has sort of happened before. There's sort of two episodes that are interesting here. The first is when Australia asked some awkward questions about the Uyghurs in Xinjiang, and Australian companies were sanctioned on the back of that, and their stocks fell. Then there was the origins of the COVID pandemic. In both cases, Australian politicians led the world basically in asking China for more information, asked some awkward questions. And in both cases, the Chinese reacted very badly in terms of their relationships with Australian companies. I think coal stocks were one of the ones that were hit. And this is happening in the US right now. I think the Chinese have sanctioned US coal stocks. But so this has happened repeatedly before. The real reason to focus on this, though, for Australians more generally, is that our exports to China dominate all other exports. I think they're more than the next 6 or 7 countries combined. So if we were, in other words, Australia relies on China's integration into the global economy, China being able to trade very easily around the world. If we were to lose some large chunk of that resources demands, mostly resources, as you suggested, that's going to be a massive hit to the Australian trade balance, to stocks, resources, stocks on the ASX, to tax revenue, to all sorts of things. And we're already at very low levels on the on the Australian dollar, and resource stocks are already underperforming the ASX 200 quite badly. So for this to continue to get worse, as I'm worried it will, would mean that we go from a bad situation to a crash. We go from an Aussie dollar that breaks extreme lows. We go for resources stocks underperforming even worse than they already have in coming years. What other sectors? It's difficult to know, but a proper trade war with China, I think, would hit the valuations of all companies around the world. One of the disappointing angles, I think, for Australians is that the resources sector in the US would probably get the support from the Americans in a tariff war. So I'll try and explain that a bit better. The Americans are hoping to wean themselves off China. They want to have their own production in America. I don't think they're going to be buying huge amounts of Australian resources as part of that plan. I think they'll be buying huge amounts of American, Canadian resources as part of that plan. So there's a risk here that as the production center of the world, the manufacturing center of the world, shifts from China to America to some extent, even if it's a small extent, Australia loses that business. Australia's business doesn't just shift to demand coming from North America instead. That said, the companies that are operating in America, and there are quite a few on the ASX, those might stand to benefit.
What about from a geopolitical perspective? Because it isn't with that being said, is not Australia a huge strategic partner in the South Pacific region for the US? I mean, they wouldn't want to jeopardize that, surely.
Yeah, well, they wouldn't be jeopardizing it. It would just be making America great again.
Oh, yeah,
They're
enough.
still guaranteeing Australia's security. And one of Trump's big lessons, right, is he wants countries that are benefiting from America providing the national security to pay for it. And I would argue Australia's probably on that list somewhere, dramatically lower than the countries that Trump has been picking on in Europe, but nevertheless on that list somewhere. So I suspect we might go back to being America's lackey in many senses. And I don't think that would necessarily benefit our economy because it's been so heavily geared to China. Hopefully, we can replace some of that with business from India, business from Indonesia, and other parts of the world that are booming instead. But nevertheless, I think at the very least, the short-term risks here to the Australian dollar, to Australian resources stocks are dramatically, dramatically higher than is being priced in. And I think we're all in for a big surprise when China responds unexpectedly, badly, to being targeted for fentanyl smuggling, given that's what was done to them 200 years ago.
Well, that kind of comes back to the way that you suggest that Trump's negotiating tactics might actually backfire when it comes to China. So, looking ahead, what or in the media, what early warning signs should investors be watching for that could signal an escalation?
Yeah, so we shuffled this article and this video forward in the weekly schedule because it's such an urgent thing. And sure enough, since I've submitted it, the Chinese have come out with some new tariffs, retaliation, and there's been a bit of a war of words. When it came to Mexico and Colombia and Canada, the same thing initially happened. In each case, the leaders of those countries had a war of words with Trump. And then within a weekend or 24 hours, they all rolled over, right? So the Canadians have committed, I think, $1 point something billion to policing the fentanyl border. The Mexicans are putting 10,000 National Guard troops. The Colombians eventually accepted plane loads of illegal immigrants being deported back to Colombia. I don't think that part is going to happen for China, regarding China. I think the Chinese are going to continue and sustain this tit-for-tat trade war and war of words for a much, much longer period of time. And nobody's called Trump's bluff yet. We don't even know if he is bluffing or not. Maybe he really would be willing to sustain these ridiculously high tariffs on the likes of Mexico, Colombia, Canada, and China. It's just
But they didn't want to find out.
Yeah, they didn't want to find out, and that makes sense. The economies in those countries are very reliant on America. There's some analysis from Jim Rickards actually about the value of the roses that Colombian businesses were going to sell to America for Valentine's Day. In other words, the trade war with America needed to be solved pretty much this week in order to make those business deals to export and import the roses to America. And this is a huge business for Colombia. With China, they're a bit more evenly matched, right? The economy size, military sizes, that sort of issue. So there's lots of other reasons why China might not be willing to just roll over to Trump. But I think what markets are not realizing and not pricing in is this the idea of face in China. I know a bit about it because my wife's Japanese and lived in Japan a long time. They take the sort of how well they're respected very seriously. So if you directly insult someone, that pretty much precludes them from doing a business deal with you.
Yeah.
And nothing is more insulting to the Chinese leadership than accusing them of opioid smuggling, because it just harkens back to that century of humiliation of being dominated by the Western hegemonic empire and their extremely powerful navy. I don't think the Chinese leadership can give in to Trump's threats, given that they are justified by fentanyl. If they were justified by something else, such as the trade balance or unfair practices in Chinese trade restrictions or something like that, maybe China could give you a little. But because he's insulted them by referring to fentanyl and opioids, he's sort of picked a fight that China can't afford politically and in terms of their face to lose.
Yeah, fascinating. Well, let's just bring it back to Australian investors and how they kind of navigate this. So looking at our unique position between these two powers down here, what defensive measures do you think Aussie investors can be considering? You've already mentioned Aussie businesses operating in America and generating revenue in America and profits. Is there anything else that's pretty obvious or comes to mind? I know you mentioned gold in your article.
Yeah, gold's the obvious one again because as these trade wars escalate far more than is expected, all these different countries around the world are going to sit there thinking, well, if we hold our international reserves in US dollars or euros, then we're sort of at risk, right? Because we want to trade with China. It's a huge economy. We want to have good relations with the US because it's the globally hegemonic power. And you can't straddle both very easily. So what I think countries are going to be doing is allocating more and more of their reserves to gold and less to things like American government bonds and European government bonds and the currencies of the two as well. So I think and this has already begun over the last few years, especially since the Europeans and the Americans sanctioned and then froze and then confiscated Russian reserves. All these countries, places like India and Indonesia and so on and so forth, they don't want to take sides in this sort of trade war. And so their way to opt out of the risk of holding foreign assets is to own gold instead. So the share of gold as a percent of reserves is quite rapidly rising over time. I think that trend's going to continue, which means a higher gold price. If governments and central banks are buying gold, then the price is going to be going up overwhelmingly likely. So the gold miners, gold itself is a great way to go, especially if the Australian dollar falls, the gold price goes up disproportionately quickly.
All right, we'll leave it there, Nick. That was a fascinating little discussion. I'm sure we'll have more of them as the developments transpire, and let's see what happens next week. A lot's happening at the moment. So the situation will change again tomorrow.
Publish the video, quick.
I know, we will. All right, Nick. Well, good luck with the banks. No one's going to know why I said that, but maybe you can fit us in next time. Thank you for your time. And to read Nick's article, it's in the comments. It's in the description below, and do leave a comment. That'd be great. Cheers.